And thank you so much for the people that have already communicated with me all of the questions that I've asked so far. But we're going to go ahead and get started. My name is TJ Daniels, and I'm the Director of Mission Impact and the Senior Loan Officer and Credit Counselor at the Iowa Center. We are so glad to have you here with us today. You will get an email from my colleague, Ben Schultz, afterwards with the survey and follow-up information. So please keep an eye out for that. You always want to check your junk email or your spam email, just in case. There's a lot of valuable information that will be in that email. So please look for that. And today we are excited to be joined by Julie Lammers to talk about financial foundations for business owners. Whether you're just starting your business or focusing on sustainability and growth, creating a solid financial foundation is essential to success. Julie is going to help us discuss expectations, financial security, and learning to grow without the burden of debt and uncertainty. If any of you have ever spoke to me before, you know one of my main things is growing your business without getting in debt, or at least so much in debt. Like, let's minimize that and grow our business as successfully as possible. And just a quick introduction for Julie. Let me turn off this. Julie is currently a business counselor with the Kirkwood Small Business Development Center. She is also an adjunct instructor at Kirkwood Community College and module facility instructor for the Goldman Sachs 10K SB program. Julie is president of Lambro Properties, a commercial investment company. Julie has also sold her privately owned group of stores, Coffee Smiths, to a top Midwest franchisor, Scooters Coffee, in 2016. Now, I've actually worked with Julie before, and I swear I didn't know all of this about her. So I am like even more impressed.
Oh no, it needs to stop there. I put my pants on it's just the same as you.
But I mean, this just goes to show she's a graduate of the University Iowa School with a BBA in Human Resources and Management Information Systems. Once again, Julie, thank you so much for joining me again. I always enjoy listening to you present. And as of right now, Julie, the floor is yours.
Oh, well, thank you, TJ. And as all of you know, I mean, she may have, given me a few praises, but TJ is such a valuable resource to everyone there. And so it's wonderful to know about all the good things she's doing there. And, when I think of financial foundations, I think my husband probably laughed a little bit when he's like, "What? You're giving that presentation?" I'm like, "Yes, I am," because you know what? I'm just an ordinary person. I don't have an accounting background, though my dad and my brother wanted me to go into accounting. And when we ran the main portion of our business, Coffee Smiths, my husband did a lot of the accounting and bookkeeping work and so on. However, at the end of the day, at the end of the quarter, the end of the month, the end of the year, I know how important a financial foundation was. So I had a number of things that I was always doing on a regular basis with my business. I also have a number of things that I do with the businesses that I counsel and the students I try to teach. And so to me, it's very, very valuable. And I know that I know that we're all getting zoomed out these days, and I wish that this was a little bit more interactive. So I do want to leave time at the end for questions or Q&A or whatever. Or if you throw something in there, I don't mind if TJ interrupts me and says, "Hey, wait, go back a slide," or something like that. I am totally cool with that because having a good foundation is just absolutely essential. So what we want to do today, I do have a presentation. It helps keep me on track. Otherwise, we would have an uncharted, meander through all sorts of things over the course of the next hour. And it still may seem like a bit of meandering, but we're going to do our best. So what we are trying to do today is make sure that we're all on the same page with understanding the value of a solid foundation. Why is that important? We want to talk about some of the primary steps, or what I think are the major bricks of that foundation, and then review what are probably, I consider, some of the best practices. And you can see that I put habits in parentheses. And you know what I think? I think that, or at least what I've found, is that the habits that we have personally in terms of how we keep track of our money, the money coming in, the money coming out, looking at our bank statements, all of those things, how do we pay our bills, those habits that we have personally often are then replicated with what we have as a business, even as a sole proprietor. And then in moving into like LLCs or S Corps, all different structures, those habits are kind of often similar. So today we're going to kind of be talking about practices or quote habits that your business needs to have. And so I'm delighted that you're here, and let's keep going. So I want to take you to an image. I have this image. This isn't the exact image, but when I was in late grade school, middle school, I started becoming aware that my uncle Dewey, yes, his name was Dewey, used to come to our house once a year, and on a Sunday afternoon, and he would come into the house and he'd have a box of receipts. As I said, it's not that box, but something like that. And he and my dad would sit down at the dining room table, and my mom would tell me not to bother them. And of course, there would be a little bit of colorful language going back and forth between my father and my uncle over the course of the afternoon. And then he would leave. Well, guess what? My dad worked for the IRS for 33 years. So he did auditing for the IRS for businesses all over Eastern Iowa. So he knew taxes backwards and forwards, and even did them after he retired later on. So he knew taxes. My uncle, on the other hand, Dewey, was a veterinarian. He was a veterinarian in Maquoketa, Iowa. Any shout outs from Maquoketa, anyway, he of course worked with domestic animals and farm animals and stuff like that. He was a gregarious, outgoing guy that could tell stories like no other. However, when it came to running his business, he would, I think apparently it seemed like he would just kind of throw all his receipts and bills and all of that kind of stuff in one box, or maybe a file folder or something every year. And he really wouldn't do much on the bookkeeping end of things, but he would show up once a year. And my guess is it was probably the Sunday before taxes were due, and he would work with my dad to get his taxes done. Now, you all know that that's probably not the best practice. And we know that, of course, these days there are a lot of tools and things that are helpful. So I would encourage you to think about how you can, take wherever you're at with your business financial foundation and figure out how to take it to the next level. So hopefully today we can at least raise the bar a little bit from wherever you're at. But in the end, I still want you to be like Dewey and have a smile on your face and be having fun along the way. So when we think about a financial foundation, what is the value of that? When I think about it, I think of it from the perspective of planning. If you understand how your money is coming in and out of your business on a regular basis, it helps provide for some planning for the day-to-day. Can you pay your bills? Can you pay yourself at the end of the month? Can you pay your employees? What does that look like? How can you, if that foundation is there, if you understand what's going on, there's some stability. You aren't figuring out how to, throw something on credit card, or, delay a payment, or let something lapse in order to run your business. Also, having a financial foundation can help you plan for the future. It can help, with those decisions. It can help you think about perhaps the seasonality of your business. You may have a business that has a lot of activity here in the summertime, and so the money is coming in, the bank account looks great. But what does it look like in January? Well, if you have a good foundation and a way of tracking and even forecasting and planning for the future, you can be in good shape. Also, when you have a good foundation, it can help you with savings. You can set savings goals and put a little bit of money away. Think about how those squirrels are, on a monthly basis. They're always putting a little, some nuts away for the winter, just to plan for, those cold times, those tough times, and so on. If you have a handle on your money, you can do some work with savings. One of the examples I think of when I think of a good foundation is one of my clients that is an artist, and she creates furniture and art objects, for the walls and so on. and she's very good. She's gotten a lot of national attention. Well, she had someone approach her, again, a national company, and say, we want to sell your products. We want you to create widget A and create a lot of them, and we're going to sell them on our platform. And because we're famous, you're going to sell even more. And she was super excited about it. And I would be too, getting that type of national attention. But then when we stepped back and we started to look at the numbers, because, you know, as a wholesaler, I mean, that national company was going to buy her widget or her art at a certain price, and then they were going to sell it for another price. Well, the price that they were going to pay her was okay, but then once she took out her cost of goods and her time and effort, she didn't get much return on that. And so she really had to evaluate, is it worth it to try to sell my products through this national company and only get a wholesale rate? What will my return on it be? What will that profit margin look like? And so in the end, you know, she decided to walk away from that opportunity, even though it looked so exciting, and forged her way on her own. And she's found some other avenues and other opportunities. So it's all been great. But having an understanding of her numbers really helped her make that decision to say no to a big company. Other types of values that you get from having a good financial foundation is just even with tax planning. You know, you can figure out what your quarterly payment should be. You can make sure you can pay your bills and pay the taxes rather, and you're ready. If that foundation is crumbly, or if there's no basis for it, it's hard to plan and figure out what you're going to do with your taxes. So that foundation helps make you ready. And next thought is that you're more attractive. You're attractive to lenders, investors, and buyers. If you have your foundation all, you know, you have your data, you have statements, you show tracking, you can show them how you've grown your sales, and you know, have good operating margins and that sort of thing. That helps if you do need to go to that lender. I agree completely with TJ. It's best to bootstrap your business, not be indebted to others, but sometimes to grow your business, you need to. Like when I was adding another coffee shop location in our area, I had money set aside that we'd been saving, but it wouldn't be enough to buy a whole new building and start a whole new coffee shop. So yes, I had to go to a lender. But guess what? By having my ducks in a row, by being able to show some of my financial statements as well as my projections, I was able to get the loan. The same with if you want to go to an investor. Maybe you have an opportunity with an investor, or potentially even a buyer, someone who wants to buy your business. If you don't have those basics down in terms of how your business is running from a financial perspective, it's hard to convince someone to invest in you or to buy you or buy your business if that's what you're looking for in terms of an exit. Now, I know that at the end of the day, a lot of you may look at financial activity and all this tracking and bookkeeping and so on as tedious. However, I don't enjoy it either, but at the end of the day, it can reduce your stress. It can help you know either how well you're doing, or maybe if you're having some struggles, it can help you actually reduce your stress, because at least you have the awareness of, okay, I need to make a decision. I need to make a pivot. I need to do this. It all seems simple though. And what we see often is that this is still where we're at, right? We all have our head in the sand. Well, when I used to help with some financial literacy counseling for individuals, we actually found in studies that there are a lot of people who keep their head in the sand with regard to financial matters. And you know what? It's human nature. You know, sometimes you want to avoid it because it's tedious. You just don't, you want to balance the checkbook or mess with numbers. I get that. Sometimes you are afraid, you don't know if it's good or bad, how you're doing from a financial perspective. And sometimes you know that, yeah, you aren't doing well at all, and you just don't even want to deal with it. And you just want the problems to go away. Well, I know that we're all adults on this webinar today, and we know that we really do have to get our heads out of the sand. We need to look around. We need to figure out what's going on in order to take our business to the next level. So this is how we do it. We lay the foundation. And I think that, you know, when you think of a bricklayer, they have nice, you know, bricks of uniform size. They have tools to help them with putting it together. They've got the mortar that helps glue the bricks together or, cement them together. However, if there's a bricklayer on the call, I know I'm not really saying this all correctly, but the point is that we need to have the habits of a bricklayer when it comes to our business. We need to put the financial bricks in place, the systems, the methodology, the actions, the habits in place in the same way, and build over a year, week after week, month after month, year after year, in order to have a good foundation for our business and to take it to the next level. This all requires a lot of discipline, and it takes some work. So, no matter where you're at today, lay that first brick or lay the second or start going to the next level, which I'll talk about in a little bit. So what are some of the bricks? Well, I wouldn't say these are necessarily all in the perfect right order, but these are some of the ones that I think are the most important. So first one, keeping your small business finances separate from your personal finances. It can be so easy, especially as a sole proprietor, to just kind of commingle and kind of get it up and going. And I get that. But as soon as possible, establish that business name, get your EIN, get your separate business banking account, and keep it separate. I know that sometimes you're going to take money from your personal account and you're going to put it in your business account in order to either get it started or to help keep it afloat. I mean, we certainly did that now and then in those summer months when we added another location. Things were a little scarce, in terms of people coming in, and we had to loan money to the business to help it go. But then over time, we moved it back over and we paid it back. Another reason to have your accounts separate is to help with tracking and accounting at the end of the year. If you want to do a good job with your taxes and that sort of thing, understanding all the expenses that you incurred, it's a lot easier if they're kept separate and they're in a separate bank account that you can look at, and their credit card, and that sort of thing. So keeping them separate helps you with record keeping. It helps you prepare for taxes. So those are all good reasons. And at the end of the day, having them separate will help you if you ever have some creditors who are not happy with you and they're coming after you for one reason or another. It's a good idea to keep them separate to help protect your personal assets. So always remember that when you are signing, you have that bank account in your name, your business name. Make sure to have your lease, your loan, all of those things in your business name in order to just create the right foundation for you. So we've kept them separate. So now let's think about some of the key activities for laying the foundation. You really need to have some systems in place for those key activities. There are some things that need to happen on a regular basis, no matter what. So of course, one of them is bookkeeping. And I'm actually going to have another slide on this in just a minute, but having some method, maybe hopefully in these days, better than Dewey's, one box for all of the receipts, perhaps 12, or maybe envelopes separating out the 12. Obviously there's tools out there that really can help us, but having some type of system in place is important for bookkeeping. If you handle cash for your business, having a system and a process in place for handling that cash on a regular basis, it can be from balancing your drawers to how much money do you keep in your safe at your account, at your house, or your brick and mortar. How do you handle deposits? How do you use petty cash? If someone comes and washes your windows at your place, are you paying them out of the drawer? Or are you asking them for an invoice? That cash thing, how it's all handled, especially if you end up having employees, is pretty important. So you better have a system in place for tracking it and handling it from the get-go. Another one that I think is just critical is inventory management. And, obviously there's systems and there's some tools out there, but from an elemental level, if you are buying materials, raw materials, let's say, and turning them into some type of product, you're going to want to count them, track them, verify that what you ordered is what came in. If you order 1,000 widgets, you got 1,000 widgets. And at the end of the month, how many of those did you go through in order to create your creation? Like in my situation, a coffee shop, we had a lot of milk we were buying on a regular basis, syrups, powders, all sorts of things, and to make our product. And understanding what's coming in and what went out helped us figure out our cost of goods, helped us do tracking over the course of time in terms of was it going up and down. It also helped even with some of the finished products, like we bought some, finished granola bars and things like that. How many came in? How many went out? Was there loss? Was there damage? I know that this can be hard. It can be tedious, but the more often you count, the better tracking you're going to have from an inventory management standpoint. You're also going to be able to value that. What if you have a loss, like a flood, a fire, derecho? Who knows what can go on these days with the next crazy thing? If you have understanding of what your inventory is, that can help you with any type of loss. And it can also help you with planning and pricing, as I said, cost of goods and that sort of thing. So it also helps you prove from a balance sheet standpoint, what is part of the value of your business, because what you have in inventory certainly gets counted from an asset standpoint. Also, systems for payroll. Again, probably could have a separate webinar on payroll, but once you start hiring people or you're even paying yourself, having a methodology for how you track time, how you pay for time, having a system in place, that is important, as well as, of course, taxes. And then we'll have a separate slide on this one, but having a plan in place and some structure, some predictability around that is certainly very important. So when we think of these activities, it's good to have checklists. My husband had, and I didn't put this down here, but he had a checklist of things that he did for every payroll, for every month, and to close out the books for a month, close them out for the quarter, close them out for the year. I have to go through these 20 steps in order to make sure I've done everything. Well, a checklist is a type of system. Think of creating checklists and accountability for most of your key activities, and you'll be in good shape. When we think of bookkeeping, as I said, I have a separate slide on this. Hopefully you aren't using Abacus, a little bit farther along than that, but remember, every month you should be keeping and organizing all your bills, all the receipts, invoices, all of that. Keep it organized. As I said, okay, is it 12 boxes? Is it a file folder? What is it? Figure out how to record all of that in a spreadsheet, in a tool. Figure out how to have the discipline. Either is it on a weekly basis, bi-weekly, every day, or at the end of the month. What helps you get organized around this? One of the biggest things that we know in life as adults is like, you need to know yourself. You need to know your strengths and weaknesses. Go ahead and admit what that is, and then figure out how to create a system to help you get that done on a regular basis. Then take everything that you've recorded, make sure and be totaling up at the month end. Where did you end up? How do things look from a expense and income standpoint? And then step back and also audit bank statements, credit card statements for accuracy. I can tell you, over the 10 years that we owned our group of coffee shops, the bank was wrong sometimes. We were wrong sometimes. The credit card processor was wrong sometimes. And sometimes it was in our favor, sometimes it was not. Whatever the case, if you take the time to audit these things on a monthly basis, you're in much better shape. You can resolve the problems, you can find the error. If you wait till the end of the year, oh my gosh, that's 12 months worth of stuff to look through. Excuse me. So save yourself, take the time, create a process at the end of the month to be looking through all of that and making sure it's in good shape. And there are tools out there. There are QuickBooks, there's Wave, there's Zoho, there's apps. You can scan your receipts. You can do all sorts of things. And I know that Square, and there are many tools out there that can help you do this job. And at the end of the day, there's still spreadsheets. So if you say, Julie, my business is so simple, I don't need one of those. I just want spreadsheets. Ugh, spreadsheet, say that fast. You can still do it. Do it on a spreadsheet. I don't care. Just take the steps and start creating a system that makes sense for your business. I will say this last note on tracking and evaluating your accounts receivable and accounts payable. People don't always think about this, but it is important. So let's first talk about the AR side. So if you are a business that, you don't receive the payment right away, like I was, so it was coffee shop, other than I did invoice catering accounts and so on. But if you have a situation where you are net 15 or net 30, you're sending an invoice to a client for whatever service you might have provided them or what have you, how often are those clients paying on time? Do you follow up with them? Do you have a procedure for collections? Are people, supposed to be paying net 15 and really it looks like 20 or 30 or 40 days out? What could you do to incentivize them to pay on time or perhaps to pay early? If you are I had a student who was going to do a fencing company this last semester. Well, I had to talk him through the fact that he probably wanted to or should have like some type of down payment system so that when someone, created an order to build a fence at their property, that perhaps he should get some money in the beginning to help pay for those supplies. And then he could, maybe half down, and then he could bill them for the remaining half once the, project was done. What can you do to help you manage your cash flow so that you can pay your employees, pay for your supplies, maybe even pay yourself at the end of the day? Think through that accounts receivable and how that looks. On the flip side, how is accounts payable working? What could you do over time? If you are very reliable and you're paying your bills always on time with a given vendor or distributor or whoever it might be, maybe in the beginning when you first get started, they want to set you up on something pretty tight, like again, a net 15 or something. But if you show over time that you're reliable and you're ordering a good quantity of, whatever that X is, or perhaps you can, after 12 months, negotiate and say, hey, could I move this out to net 30? It would really make my business, the cash flow of my business work a little better, or even net 45 or something like that. So when you have a bookkeeping system, it kind of helps you, as you can see that tracking, see those trends, figure out how to maybe renegotiate what's happening on the AR and the AP side of things. So let me get a quick sip. All right. Now I know some of you are sole proprietors and you're winging it and doing it on your own, and that is great. I know though that some people, they outsource their bookkeeping because again, they don't want to do it, or they want to make sure it's done right. And I totally get that too. Sometimes you might choose to delegate your bookkeeping to perhaps someone like in your staff, or like, as I said, my husband, he had a minor accounting, so he could understand it and was willing to work on it every Saturday. So that was great. He kept his full-time job the whole time we owned our business. But anyway, there were a lot of great bookkeeping folks out there and accounting services and so on. But at the end of the day, this is your business. You need to keep them accountable. You need to ask for reports on a regular basis. What are they paying? What bills? What's happening? How are things looking financially? I suggest you should always be the one signing the checks and watching what's happening. Holding them accountable is important. So I totally get it if you don't want to do some of this, but don't put your head in the sand. Keep your head out of the sand. Make sure that they're doing what they're supposed to be doing. And you can even take some of the stuff even from this presentation and go, hey, what about this? This crazy lady, Julie, said I should be looking for this or this report, or can you help me create this report on a monthly basis? Hold them accountable. And yeah, make sure we had to throw a cat thing in there, I think. Make sure whoever's doing this work for you, if they are, that they aren't falling asleep on the job. So anyway, another part of laying a good foundation is just making sure that you're following the rules. I can tell you that I have met with many clients over time who, over a while, I've developed a good rapport with, and they've said, Julie, I've been in business a couple years selling my whatever it is. I've never paid my sales tax. And I'm like, oh my, okay, well, let's get this organized. And I, show them the sites and help them along the way. And it all works out in the end. Get set up, make sure you're doing that. Same with things like withholding taxes. That's an example of where I had someone who had a bookkeeper that wasn't actually paying that person's withholding taxes. And this person had like about 9 or 10 employees. So it kind of had added up, and in the process of me coming on to help her as an SBDC client, she was moving from this bookkeeper to another one, and the new bookkeeper discovered this. So lo and behold, this client had a pretty good sized tax bill to go back and pay all those withholding taxes from the last year and a half. That wasn't great because she certainly didn't have the money set aside at the time to pay those taxes. So she had to work through a payment plan with the government, and it did get squared away. Again, there's a lot of great bookkeepers out there. I'm not disparaging any of them. It's just be aware, make sure you're following the rules. The same with getting those income taxes paid, doing your quarterly estimates. Do it right from the get-go. That's a good practice. It's a good part or important part of a good financial foundation. Last but not least, it's related kind of for a financial foundation, and it's just making sure that you classify your employees and contractors appropriately. I know in the beginning it can be very easy and also less costly when you need a little bit of work done and you just pull in someone as a contract work to get that work done, and that's fine. And maybe they never help you again. But if you have a situation where you're continuing to need contractors and you are, providing direction for them in terms of their work, think about how they should be classified. If you go out to the IRS and even there's guidelines out there on employee versus contractor, and take a look at them, I think you would be surprised. The IRS is continuing to crack down on how people are classified. And again, you don't want to be caught in a situation where you have a contractor who should have been classified as an employee, and then you have all sorts of financial obligations that you need to take care of. So again, better to be proactive and try to do things as appropriately as possible. All right, so that's a lot, right? All of those things in activities are certainly, very important. And I would say from today, if you start doing some of those or start doing some of those better on a more regular basis, that's super important. And, that's a great way to create good habits in terms of having those systems in place, doing the bookkeeping on a regular basis, figuring out what your strengths and weaknesses are, and, planning accordingly. And, we could stop there, but there are things that I would challenge you to do in terms of creating even more of that foundation, filling a little bit more in and taking your business to the next level. So that's what we're going to talk about next. Oh boy, kind of crazy. All right, so excuse me. If you have a good foundation, you've got those basic systems in place, and you kind of know a little bit about where you're going and you can plan, then I suggest you work on creating a savings goal. That savings goal, can be something, I put it in writing, put it, in your office, put it, someplace, and create a goal. And this can help you in a couple different ways. One, of course, it can help you with a rainy day. And in terms of having money set aside in case, sales go down or you lose a key contract, or perhaps there's some seasonality to your business, but putting that money away can help you because it'll be that cushion for you that you might need. Another way I think of, savings is in terms of growth, and that can be to grow your company. If you, at some point in time, want to, let's say you have a Facebook page for your business and you want to move to a website, or maybe add e-commerce to your website, or maybe you want to start build another location or whatever it might be, or add employees. If you start putting that money away from a growth, and saving it, that can help you grow your company, and you can leverage it. As we've been saying all along, it's really best to grow your company with your own funds and to get bigger and bigger. But there are times when you might need to approach a lender or investor. And again, if you can say, well, I've saved $10,000 towards this goal, can you help lend me 30, and we can pool together, and then I can go buy this, piece of equipment or this software or this, whatever it might be. That can help you leverage your situation to grow your company. And we certainly want you to keep growing and trying to make your company bigger and better and all those good things over time. Another thing that the foundation does is it helps you step back. If that foundation is stable and predictable in terms of what's happening with your company, then you can look for areas where you can cut costs. And one of the areas might be in terms of your vendors, like who are you getting your supplies from, either finished or raw materials. And when I think of vendor management, I think of like one of the things we did with our coffee shop. Is we, of course, many of you familiar, even if you don't drink coffee, you all think of pumpkin pie lattes and pumpkin pie coffee drinks in the fall. Well, fall comes every year. And so what we would do, we always had the same brand of coffee syrup, or syrup rather, that we used to make our pumpkin pie lattes. But there are many distributors for that brand. So what we would do in the summer is we would put out bids to those distributors and say, based on our expected sales, we think we're going to be going through so many cases of pumpkin pie syrup every week, every month during the course of the fall. What can we do? What can you do for us in terms of pricing? Because we think we're going to be buying this many. And then we would compare and contrast those different quotes from those different distributors and try to get the best price possible. So that's an example for you of how to work with your vendors. Also, you might get opportunities if you pay, like I mentioned earlier, paying on time or paying early. Maybe you can get a discount. Another area for you is to look at efficiency. Where can you be more efficient with your people and with your staff? Are there opportunities to, use tools to leverage some of that work? Remember all those spreadsheets I was mentioning earlier? If you're using spreadsheets to do some of your tracking, that's fine. But let's make sure that you might enter stuff in one spreadsheet that you don't have another person doing the same data entry into a different spreadsheet. A friend of mine works for the construction company, and she's seeing that happen right now. And it's just like, wait a second, why can't we combine this into a little workbook and share the data? We shouldn't have two different people doing data entry with the same data. So just a little example for you, but think about how you can step back and look at your foundation and improve efficiency. When it comes to thinking of next level activities, I also encourage you to figure out how to create and evaluate your financial data. Now, this can be through a number of different ways. A lot of tools will help create these types of statements, but there are even basic Excel spreadsheets you can get off of score.org, one of the resources I'll list later on. They can help you create these. An income statement can help you, of course, validate what is your profit or loss for a given period. A balance sheet can help you understand, what are the assets and liabilities of your company. And of course, a cash flow statement can help you understand how is that cash flowing in and out? Where are you at? The beauty of these statements, the beauty in terms of creating them, is that they look at a period of time. And so you want to be able to create these on a regular basis, monthly, quarterly, obviously yearly, and be able to say, how do things look this month versus last month, or this month or this quarter in comparison to last year's quarter. And that information helps you then understand where you're at. And then from there, you can figure out where you might be going. Also, for many industries, there are benchmarks in terms of this is what your return on assets should be. This is what your inventory turnover could be. Taking a look at what the industry benchmarks are helpful. But in order to do that, you need to be creating some of these statements on a regular basis and then comparing them to, and then you can crunch out your various industry benchmarks. So those can be very helpful activities, and they may seem intimidating right now, but again, anyone who is with the Iowa Center or someone like from SBDC or SCORE, any of those folks can help you get to that level of evaluating those if you want, or certainly your accountant or bookkeeper. All right. With this data, though, we don't want to just look at the past. We want to look at the future, and we want to create forecasts. Oh my goodness. Well, why forecasting? Well, forecasting really can help you, set goals and plan for the future. I recently had a client tell me different artist type, creative type, who has been selling things at various markets and pop-up stores and so on around the area. And she has an opportunity to go into a brick and mortar location. Fantastic, and it's a really great location. Here's the deal. For the first year, the rent is going to be around $800 a month. Isn't that awesome? So $800, she feels pretty comfortable being able to swing that. But after the first year, the rent goes up to over $2,000 a month. Wow, that's a pretty big change. Can she swing it? Well, if she uses one of my favorite tools, which is a cash flow forecast, I talked about that a couple weeks ago, that can help her figure out where she is at in a given month and where things look like 6 months from now or 2 years from now, if she's able to project that cash flow over the course of the next 12 to 24 months. So that's what the beauty is of forecasting. Now, I know a lot of you will have hesitations about this because there's a lot of misconceptions out there, and I'm just going to go through them quickly. Some people think that forecasts are only needed when you start a business or trying to get a loan. And like I said, certainly they're needed. You have to have those when you go do those things, but you also can use them as a business owner to predict and plan for the future, to make good decisions. You only need to do it once a year? Well, you could only do it once a year, but how do you measure things? If you have a weight goal or a exercise goal, or you want to read so many books per month or whatever per year, how often, if you've only measured it once a year, how do you know if you're getting there? Really should be looking at it on a regular basis and preparing and forecasting. If you made a profit, you're good to go. Maybe yes, maybe no. Do you have a good balance in your bank account? Does that mean that you don't need to do forecasting? Absolutely not. You might have a great balance right now, but what about those yearly things that are due next month? The yearly website or fee, or perhaps your insurance fee, or things that come out on a yearly basis might just wipe out your bank account next month, and then it looks bad. So a bank account balance isn't the way to predict the future. And budget forecasts are the accountant's job, or your bookkeepers, or whatever. But certainly they may help you pull data together from the past in order to predict the future, but you still have to take the reins and be in charge. So very quickly, when you're laying that foundation in terms of forecasting, I encourage you to create monthly income and expense forecasts. Income is all about the different ways in which money comes in, and then money goes out. And one of the pushbacks I sometimes get on this is, well, I know what my rent is every month on the expense side, but I don't know about, I got so many different variable expenses and things happening, or equipment fails. You never know what's going to happen. Well, I push back on them and I say, how can you make the variable expenses predictable? If you know that you have equipment that fails from time to time, then create a monthly maintenance budget and be squirreling that money away on a monthly basis so that you're ready for when that equipment fails. That's predictable, you can plan it, and it's not variable. And guess what? If at the end of the year, you never spent that, let's say you were putting $100 away every month, you have that $1,200 squirreled away at the end of the year and you never used it because the equipment never failed, well, then decide what to do with that $1,200. Maybe you invest in that equipment and buy a newer piece anyway, or maybe you put that money in that rainy day fund or that growth fund. It's okay, but figure out how to make the variable as predictable as possible, and you'll be money ahead at the end of the day. When you have those forecasts, then at the end of the month, I encourage you to take your forecast and compare it to the actual. See how it was. Was it ahead, behind? What can you do to revise your forecast for the next 12 months? How can you make them better and better? It's just a monthly habit to get into. Keep making adjustments, spot the trends, try to make better decisions. At the end of the day, like Peter Drucker said, you can't manage what you don't measure. So having a handle on your financial data is very important. All along with your business, when you got it started and even now, you've had a plan for success. You've thought about how you want to provide your business services or products. You've thought about what your market share is. You've thought about how you want to market your business, how you want to get there. Well, you also have to have a financial plan. You have to lay that foundation and figure out how to build on it from month to month and year to year. Creating a solid foundation is about discipline. It's about making the effort, and it's the way to get from a goal to your accomplishment, meaning the success of your business, to making money, to being able to grow your business, whatever it might be. And whatever your goals are for your business, start taking the reports and the information you have and share it with others. The reason you do this is to create visibility to your staff, visibility to your lender or advisor. It also creates accountability. You get advice, you show that you're in control, and it also gives you a chance to leverage resources, like I suggested, working with folks at the Iowa Center, the Women's Business Center, SCORE, SBDC, anyone out there who can help you. Because if you have a good foundation, well, the future is all yours. Now I'll open it up for questions. I know we're getting along there in terms of time. Is that what are we thinking, TJ? You're smiling. I don't know.
No, we're good. We're still good. We still have a few minutes left.
Yep.
So I know you talked about what was it? Of course, QuickBook, Wave, Zoho, and different apps. But what budgeting resources do you recommend? Not only for, well, okay, so it's a two-part question.
Okay.
For budgeting, and then just myself, and for clients that ask me a lot, like, what do you recommend people use for like paying themselves and paying taxes? Of course, you know, when people first start out, they always want to use Excel, and there's nothing wrong with Excel spreadsheets. And of course, I was going to ask if we could share that cash flow forecast spreadsheet.
Oh,
and then
sure.
If anybody in the audience wants that, I could have Ben send the link out to that cash flow forecast spreadsheet that we've looked at before.
Yeah.
But yes, what budgeting resources do you recommend? And then what resources do you recommend for paying yourself and paying taxes and things like that?
You know, those are great questions. I think, you know, when I think of budgeting, I'm still okay with doing stuff even in Excel. I think that there's some great templates out there that are just fine, that you can even take data that is in QuickBooks and like look at your actuals and take it and download it and, you know, and kind of mess around. That's a really nice technical term, but anyway, you can, you know, play in, you know, in Excel and kind of compare actuals to what your forecast. I think that, you know, when I'm working with clients and creating forecasts, I do a lot of work with people trying to get a loan, and we do it all in Excel with some workbooks that are all nicely, you know, connected with cash flow and income statements and that sort of thing. And even, yeah, I mean, loan amortization. So I'm fine with that, but I understand, you know, some of these things, not Excel, of course, but I mean, like a QuickBooks and that sort of thing, that they do cost money. But sometimes you need to, you know, you need to spend money on the things that help you do your business, you know, and then leverage your talents in other ways in order to grow your business and so on. So I think that,
right.
You know,
I talk about this a lot.
QuickBooks person, I mean, not me personally, but my husband was, and in terms of promoting it, and I've had a lot of success from my clients, but I've also had a lot that feel like, you know, tools like, just in terms of tracking, maybe this isn't so much budgeting, but I have a number of clients who just feel like the resources, the information coming out of like Square and Shopify, that they're becoming, you know, more and more robust and more helpful, you know, like things like inventory management and just, yeah, a lot of basic information that is helpful on a daily or monthly basis. I think, you know, that's a thing to leverage too. But I always think it's helpful, whatever platform you're using, that it needs to be something that you can export data from one place to another, so that then you aren't, again, doing all that double keying and tying and you know, and tying things out and stuff. So from a tax perspective, that I probably am not, you know, I'm probably someone probably at the Iowa Center who's probably better equipped to answer that. You know?
No problem. No problem.
Okay.
So I always talk about making sure people schedule time and get into the habit of doing a lot of the things that you talked about, like putting your head in the sand, no matter what, the things that we talked about today, they have a negative connotation associated with them, and people just have a fear of looking at their budgets, a fear of having to deal with their finances and things like that. So I just want to remind people that once you get started, once you get that budget done, and once you get that foundation done, building the rest is going to be super easy. Because you already have the basics done. You already have the information entered, and maybe you just have to change a couple of numbers month to month. But your budget should almost be true to what you're working with. And of course, here at the Iowa Center, we will help you with your budget. We have templates online to get you started. So as always, feel free to schedule an appointment with me, and we could at least get started with that stuff. That if anything that you take away from this today, I just want to make sure that you know, just to get started. That's the hardest step and the first step to take. And then so no commingling funds or keeping the accounts separate. I want to make sure to say that one more time. Of course, stuff happens, and you're going to take money from here and take money from there. That's almost why I asked the payroll question, because that's one of the ways that people kind of commingle their funds. A lot of us bootstrap, and we take our own funds and put them into our business, which I totally get. One of the ways that I suggest people to stay away from bootstrapping is to keep the money in separate banks, not just separate accounts, but separate banks, because a lot of the times it's hard to go here to here with the banks. So you literally have to go withdraw it and then put it into another bank account. So that was another thing. I'm sorry, I'm going down.
Can I add one thing on that bank account thing? I would, if you need the discipline or the structure, I suggest even having 2 accounts for your business. One to manage your operations day to day. The other is your savings, you're squirreling it away, or you are your escrow for your insurance payment on a monthly or a yearly basis, or your certification or your taxes. Even like something like if you're collecting sales tax, just go ahead and put it right over in this other account. You're never going to touch it until you need to pay your sales tax, which I mean, you need to pay it depending on how big your business is pretty in a timely basis. But if you don't see that money, if it just goes and is put in an escrow and just set aside, that I think is helpful, along with like withholding taxes or anything like that, that you know that it's really not your money. It needs to go somewhere else. But I don't like it to get too complicated for people, but sometimes know yourself.
This is what I really want, is the practical solutions to a lot of the problems that we face. And of course, feel free to put your questions in the chat. We have 5 more minutes. So please, once again, feel free to put those questions in chat. I could talk all day about this. That's why I love Julie so much. She's a woman of my heart.
I just threw the other, I know you guys have a lot of stuff out there, but I wanted to just make sure people, I didn't know how many people are going to join or what some other resources are. One of them you might not, I don't know if you're as familiar with, TJ, is the NFCC, the National Foundation for Credit Counselors. They have modules for small business owners that are also pretty helpful. So anyway.
That will be awesome. Okay, one more question. I have a startup struggling to find money. COVID-19 crisis swept out most of my savings, and now I have to restart with almost nothing. How can I come back online? If you don't want to take this, I'm a professional at this one.
It certainly was hard for many. I think the most important part is figuring out, what is if you may end up having to pivot your business. What is your MVP, meaning your most viable product or service that you are providing? What is it that you can do do well, do predictably, you know what the cost is. I mean, if it's personal, it's a service, you know what that is about, and how can you get that up and going? I mean, there are a lot, and I'm sure through this Iowa Center, I mean, there are a lot of different, grants coming up or grants that have existed and different types of programs that, certainly we could help you take a look at to see if there's anything that could help you from a financial standpoint. But I think if you're starting over from day one, what can get you going? What value proposition that you have that you can get going as quickly as possible, and focus on that would be my suggestion. Okay, TJ, you can have more.
No, it's hard because of course during this pandemic, small businesses have been in crisis. And I think a lot of the times that when you're in your small business, this is what you see. You know what I'm saying? So it's kind of hard to pivot and think outside of the box. But sometimes it's just downsizing what you're doing, or picking a portion of what your business is and just going on that versus doing your whole business. Normally, when you pick a portion of your business or what you do, it costs less. So of course, whoever submitted that question, as always, feel free to schedule a meeting with me and I can go over some solutions. It's hard, unfortunately, but fortunately, I've had the privilege of talking to a number of people during the pandemic and trying to find solutions on how to keep the business going with little or no money.
Yeah.
So
I was going to tack on to that only from the perspective of, especially this time last year when you were probably doing the same thing, TJ, it was so hard emotionally to help some of the businesses that didn't have their numbers figured out. They didn't have a good financial foundation. They didn't have good tracking. They didn't have, and so because like in some of these systems and like the PPP, and they had to enter all this data on how many employees and money and revenue and all that, it was a little complicated for a number of people, which is anyway, even if you had all your numbers in a row. And it was so hard because they just didn't even know where to start because they've been working in their business, which we get, instead of stepping back and understanding how is their business operating on a financial basis. And it took them a lot to get those numbers pulled together. Along with, an aside, was the number of people who weren't paying their people as an employee, but a contractor. It became challenging for them to get some of the assistance and grants that they wanted over time from this, because they really should have been perhaps classifying and paying people differently than they were. I'll get off my soapbox, but.
Okay, so my favorite question that I ask at the end of every session, if you want all of our clients to know one piece of information, they take away one piece of information today from this session, what is that one piece of information you want them to know? It doesn't even have to pertain to the
Get started. Get started.
Okay.
Lay one brick, and then the better that one brick is, the easier it is to put that next brick and the next and the next and the next. How's that?
I love it. And of course, my piece of information, it probably will always remain the same, is be happy. Be happy in what you do. If you're not happy with the small business that you may be working in, of course, there's always going to be stressful times, but you should still be able to have the fortitude to get through it. You know what I'm saying? So every day, number one goal is to be happy. So Julie, thank you again for your time today and for sharing your information with our clients. This is such an important topic, and it's great to hear from professional experts in this area that could share some of this knowledge. I know people get tired of hearing me talk about it all the time.
Yeah, it's all right. It's all good. Thank you.
Thank you to all of the attendees as well. Make sure to keep an eye out for that email from Ben. Feel free to join us next week as we'll be talking about key performance indicators and how to continuously track and monitor the success of your business. And I hope you all have a great week. Thank you.
Take care.